Dividend stocks are really the best example that I can think of truly passive income. Think about it. You do your research, you buy a great stock once, and then over the next several years, decades, you just sit back and collect that passive income every quarter when the dividend payment comes like clockwork. But how do you find these great stocks to begin with? Today, I'm going to look at three of my favorite dividend stocks. And my checklist is simple. I'm going to start with strong businesses first. They're going to have sustainable and growing dividends, so lots of good cash flow and a valuation that just isn't simply insane. So let's dive into that first stock. And this one's not going to need any introduction for most investors. McDonald's, the global restaurant fast food chain. And look at the stock over the last year. It really hasn't done anything. It's been completely flat over the last year. It's trading at $311 a share right now, compared to about $315 about a year ago. The high that we saw over the last year has been in just a couple weeks ago in late February. It was trading at $341 a share, and then the low was way back in June when it was trading at $285. But we can see what that did to the yield of the dividend so far. Currently getting a dividend yield of about 2.4%, and the lowest we've had over the last year has been about 2.1%. But look at this dividend growth. I wanted to show you guys this. 10 years ago, the stock was paying a dividend of about $3.55 a share. And today, that dividend is $7.44 a share. So it's more than doubled in the last 10 years. That's fantastic growth. And it's only a compound annual growth rate of about 7% every year. So that's all you need to double your dividend in 10 years. And I could see McDonald's doubling its dividend another time in just the next 10 years. But what do I like about this business? So growth management just said 2 weeks ago that customer traffic was solid for the fourth quarter, and comparable store sales growth was 6% in the US market for Q4, and that's an acceleration over the last couple quarters. So it's entering 2026 with some solid momentum, and that makes sense because a lot of US consumers are focused on saving money right now with inflation and the economy slowing down a bit. And so it makes sense that McDonald's would be seeing more customer traffic. And so I'd expect that to continue, growth to be really good for 2026, heading into 2027. But the real figure I like a lot here is operating profit margin. And on this chart, I wanted to show you the last 3 years, McDonald's has had operating profit margin of 45% or higher. So 46% in 2023, 45% in 2024, and 46% in the year that just finished. That's amazing operating profit margin. And it just reminds you that this isn't really a restaurant business. This is a franchising business and real estate business. And, McDonald's gets most of its profit from not from selling burgers, but from those highly profitable franchise fees and the rental fees and the real estate fees that it charges to franchisees. And so that's a stellar business model that I don't think is going anywhere anytime soon. And it's going to continue to keep winning. And like I said, the current yield is about 2.3% on that stock, compared to about the 1.5% you would get by owning a broader index fund, which is a good way to park your money. So I think that's a really good option if you're looking for a solid dividend payer. Another dividend stock, number two, that's not going to require much of an introduction for most investors is Coca-Cola. Let's take a look at that stock and how the shares have been doing over the last year or so. Again, not moving much. Coke stock is up about 7% over the last year. And again, the all-time high, or the 52-week high, was a couple weeks ago, right before the market started swooning in late February. That was at $81 a share. And the low was somewhere around September at about, you could have bought the stock at about $65 a share. And again, that dividend has been growing, but not quite as quickly. If we look over the last 10-year period, dividends 10 years ago were $1.40 a share, and now we're looking at $2.12 a share. So that's not quite doubling every 10 years, but still growing at a solid clip at about 5 percentage points every year. What's going well with this business? So I wanted to actually focus first on what's not so great. If you look at organic sales growth, so that's their main growth metric, we saw it decline during the pandemic by 9%. And then they had a big bounce back over the next 2 years, about 16% growth in organic sales. And then the last 2 years, the next 2 years, the 2023 and 2024, it was growing in the low double digits at about 12%. And then last year it slowed down to 5%. And then management's also predicting in 2026 that Coca-Cola's growth is going to stay in that 4 to 5% range. So definitely a slower growing stock, going through a little bit of a growth slowdown, but sales are still growing, and customers are really interested in the both traditional and non-traditional parts of the portfolio. So Coca-Cola's Coke Zero is doing really well, and so is its move into non-traditional things like waters, sparkling waters, teas, sports drinks, energy drinks. All that's working pretty well, and so sales are growing, just not at the pace that investors saw 2 and 3 years ago. And then profit margin is really another standout here. Operating profit was 30% of sales this past year, the past several years in a row. And I also wanted to highlight cash flow. Coke is generating something like $12 billion in cash, in free cash flow, compared to 11 billion in 2024, 2025. So that's going to give management plenty of ammunition that it can direct towards raising that dividend and maybe buying back shares. Okay, the final stock that I wanted to highlight is maybe one you wouldn't think of originally when you're thinking about a stock that pays really healthy dividends, and that's Costco. This is a retailer, and if we look at their stock right now, stock price over the last year has risen. This is, well, it's flat actually. Again, we did see a high somewhere around $1,000 a share. Costco broke $1,000 a share in June, way back in June, and the lowest you could have got it for in the last 52 weeks was about $850 a share back in near Christmas time. So why do I like Costco? So Costco just recently reported earnings results, and growth is doing well. Again, it accelerated its growth a little bit. Customer traffic is really solidly positive, 3%, and Wall Street's projecting sales growth of about 8% in 2026 and earnings growth of around 11%. Remember, Costco, kind of similar to McDonald's, it doesn't make its money in a way that you might think. It's not making most of its profit through sales of merchandise in its warehouses. Most of the profit actually comes from its subscription fees, and those are rising, and the renewal rate is close to an all-time high at about 92%. So it's really easy to cancel a Costco membership if you like, but almost nobody does it. And earnings are expected to be about $20 a share in 2026. And the other big reason I like Costco for its dividend right now is its cash. Let's take a look at that cash holding right now. Cash is up to about 18 billion on the books. And the last time cash got that high, management delivered a huge special dividend of about $15 a share back in early 2026, so it's or 2024. So it's been about 2 years since management delivered that big special dividend to shareholders, and I expect another one coming over the next couple quarters. Someone asked management about that in their latest conference call, and they did say that they do have a lot of cash and they're considering a special dividend, but they don't have any plans to announce on that right now. So I would expect that to happen, sometime in 2026, if not in 2027. The stock is at a premium valuation, though, considering that they're going to earn about $20 a share in earnings this year. So we're looking at about 50 times earnings that you'd have to pay for Costco compared to Walmart, which is something like 45. So you are paying a premium for this business, but I think it's worth it. And if it's too expensive, you might want to just watch this stock for now. So those are my three favorite dividend stocks at the moment. But I want to hear from you. What dividend stocks are you watching right now? Let me know in the comment section.